countries recently formed the Joint Cocoa Committee. Economic analyst at Data Bank, Mr. Courage Kosiboti, advised the committee to come up with strategies to control the release of the volume of cocoa beans onto the global market.
Prices of cocoa on the international market have begun to tumble due to investors' expectations of an imminent increase in production from top growing countries, Cote d'Ivoire and Ghana. Cote d'Ivoire, which is the world's largest producer, is projecting a production of about 1.9 million tons, while Ghana is hopeful of meeting its 850,000 tons target for the season, something which the investors believe will contribute to a global surplus of the commodity. The International Cocoa Organization is forecasting a surplus of 105,000 tons in the current 2017-2018 marketing year, as global production is estimated at 4.6 million tons. This expectation of increased harvest, coupled with lower demand from top importers in UK, has already started having an impact on the sector, as the commodity lost $67 last 2 weeks to settle at $2,604.50 per metric ton, and subsequently dropped by an additional $110.5 last week to trade at $2,451 per metric ton. The prices continued to dip this week as the commodity lost an additional $60 to settle at $2,391 per metric ton. The continuous decline in the price of cocoa can take away the productive incentive and profitability, causing especially farmers to reduce their investment in the sector. This could also affect government revenues from the sector in the next season if it fails to hedge the cocoa beans at the right price. Speaking to the media, economist at Data Bank, Mr. Courage Kosiboti, said currently the country had hedged the prices of its cocoa beans, and this fall would therefore not have any significant impact on revenues, but however urged the government to do proper forecasting for upcoming seasons in order to hedge the beans at the right price. With Ghana and Cote d'Ivoire recently forming a joint cocoa committee, he advised that the committee also look at coming up with a strategy to control the release of volumes of cocoa beans onto the global market. He believed this is another way the two countries contribute about half of the global cocoa beans could control the prices of the commodity in the international market.
Freight forwarders in the country have initiated processes to seek legal action against shipping lines over what they say are illegal charges against them. They are unhappy the shipping lines use a foreign interbank rate to charge them for damages instead of the approved Bank of Ghana rate. In addition, they are calling for the abolishment of some administrative charges.
Freight forwarders in the country are lamenting over fees they pay on weekends and holidays as part of demurrages. They are also unhappy the shipping lines use foreign interbank rates to charge them for demurrages instead of the approved Bank of Ghana rate. In addition, they are calling for the abolishment of some administrative charges. A 40-footer container is charged about $50 a day, including VAT. That's a day's pay for demurrages. According to the Ghana Shippers Authority, shippers paid $76 million as demurrages in 2017 alone. The head of technical committee at the Ghana Institute of Freight Forwarders, Johnny Mante, said all efforts to get their grievances addressed have proved futile. Hence, the legal action. According to them, they are in a space where clearing goods within 7 days is quite difficult, and so until that is addressed, public holidays and weekends should be taken away. They should not be calculated as demurrage. Meanwhile, Vice President Dr. Baumia has directed port officials to institute measures to reduce the turnaround time at the ports to avoid money lost in demurrages. Following this, port officials have announced that they will soon begin a joint inspection by the Ghana Revenue Authority, the Ghana Standards Authority and the Food and Drugs Authority to ease the clearing process. Johnny Mante said until the turnaround time is reduced, they cannot be burdened with unnecessary charges. He further disclosed that their lawyers have begun documenting procedures to start legal processes.
And finally, on the Ghanaian market, where equity indices on the local bourse softened to its lowest in 5 months as recent downward pressure from the financial, energy and consumable sector stock deemed the hard-earned bullishness of the market. More is in this report. Let's take a look.
Investors' perception of overpricing of certain stocks beyond their intrinsic values is a contributing factor sparking profit taking on the bourse. With both indices recording their fifth consecutive decline this week, the Ghana Stock Exchange Composite Index stats dropped 4.82% to close at an index level of 3,038.411 points, reflecting a year-to-date return of 17.78%. The GSE Financial Stocks Index also sharply declined by 3.45% to 2,779.47 points, representing a year-to-date return of 20.29%. At the closing bell, total traded volume stood at 1.64 million shares, valued at 13.21 million Ghana cedis, representing 76.89% decline from previous week's figure in terms of volume. Fan Milk Limited led the activity chart with 32.1% share of the total traded volume. Market capitalization also dipped by 1.88% to settle at 62,429.53 million Ghana cedis. Government in the week under review raised a total of 477.6 million Ghana cedis through the issuance of a fresh 10-year domestic bond. The bond, which was opened to foreign investors, is to be used in financing government's projects at an initial pricing guidance of 17% to 17.75%, a total amount of 523.2 million Ghana cedis bid by investors out of 477.6 million Ghana cedis was accepted at coupon rate of 17%.
That's all for the business block here on the First Show Live on GNTV with me, Bryson Kwesi Aminin. We are streaming live on YouTube at GNTVGH. Like our pages on Facebook, on Twitter, and on Instagram, all on GNTVGH. This has been the business blog with me. Have a good business day. Good morning.